Hello everyone, welcome back to Make Money Online. Today we'll be talking about NIO's stock explosion in 2021. Watch this video till the end to know how you can benefit from its impending breakout in 2021. NIO Inc. is the pioneer in China's premium electric vehicle market. The company specializes in designing and developing EVs. They design, jointly manufacture, and sell smart and connected premium electric vehicles, driving innovations in next-generation technologies and connectivity, autonomous driving, and artificial intelligence. Its open challenge on Tesla in the Chinese EV market and its listing in the New York Stock Exchange put the company on the map. Redefining user experience, they provide users with comprehensive, convenient, and innovative charging solutions and other user-centric service offerings, such as Power Swap, Power Express, Power Home, and Power Mobile services. The company's products combine attractive designs and strong driving performance. The EP9 delivers extraordinary acceleration and best-in-class electric powertrain technology, helping position it as a premium brand. However, it's not the only one that has popped out of the Chinese market. It has other local rivals such as XPeng Inc. and Li Auto Inc., both of whom have recently secured a listing on the New York Stock Exchange. This sounded a warning bell for NIO, as the rise of more competitors in a keenly contested market meant more battles to fight. The market is divided, with Tesla taking the lion's share. Now, the little portion of the market that we can technically say belongs to NIO is probably going to be shared at percentages by all three traditional Chinese EV rivals. This may not be the case, especially in the condition that many more have the purchasing power outside the current crop and the volume of sales increases drastically. The truth remains that while electric vehicles are a paramount, much-needed solution to the woes of the regular gasoline-powered cars, they are too expensive. This is what works for them. Not many people pay for their products, but the few that do don't mind spending so much for such a high-quality spec of the car. The cost of maintenance is also something the middle-class and lower-class individuals who make up the bulk of a society's population cannot afford. It was a problem for NIO in their early years, as they brought in a costly product that could barely attract any buyers. This sort of occurrence overshadows the goal of an organization irrespective of its promise. The deep shadow that has been cast on the market by Tesla has also affected the acceptability of NIO and its local rivals XPeng and Li Auto Inc. The trust already built in the country was a major boost to the rise in the stock of the company, which thrived in the Chinese market even when opposition arose in the form of NIO in 2018. NIO stock went public at $6 a share in September 2018. Since then, it has formed a sort of mixed market in China alongside Tesla. Electric car demand kept increasing in China, thereby benefiting NIO, Tesla, as well as now XPeng and Li Auto Inc. that focus on their domestic market. The competition is pretty hot, as the four companies are in the race to sustain the current demand and supply of the market and are in constant bouts, trying to secure a massive monopoly over incoming traffic in the market. Most of these bouts saw Tesla come out on top. This is not unexpected, as they had a ready market way before any of the other companies came into the market. The other Chinese EV companies are not laid back, teetering and doing everything in their power to gain some ground from Tesla. Given this, capitalizing on the rising demand for EVs has pushed up manufacturers' shares this year, prompting them to sell more stock to fuel their growth. Chinese rival XPeng Inc. raised $2.16 billion in an upsized share scale, while Li Auto Inc. sold $1.36 billion of new stock, while industry leader Tesla Inc. is raising as much as $5 billion in its third stock offering this year. NIO also joined the bandwagon for fundraising among new energy vehicle manufacturers, capitalizing on an 11-fold increase in its share price this year to boost its coffers and give its stock value a major lift. NIO sold a total of 14,169 vehicles. The trend shows that the company was set up for improved sales, and it did fairly well despite the restrictions. Since December 2019, NIO started accumulating share gains, and to date, the stock value has increased by an impressive 764%. NIO saw its stock price soar by almost 6 times year to date. In comparison to Tesla, both companies trade at a similar valuation, with a price-to-sales multiple of about 13.5 times based on a projected 2020 revenue. NIO is growing more quickly than Tesla. The stock of NIO is also a profitable venture for investors more than Tesla because of its relatively low stock value, which is primed to surge in the nearest future. Taking into consideration the action of the Chinese government to consolidate the Chinese EV market and wrestle a measure of control from Tesla, a line of action that would in the long run prove to be a great benefit to the major Chinese EV companies. The government is not looking to discard Tesla out of the market, but to even the odds a bit, and giving the Chinese EV companies a fighting chance in an action that is beneficial to the country too. This is possible because as much as NIO, XPeng, and Li Auto continue to succeed, the economy of the country will stabilize, and this means an increase in internally generated revenue for China as well. NIO is the first of the 3 Chinese EVs to take their product abroad. This was evident in their listing in the New York Stock Exchange before XPeng and Li Auto joined it. Though the last few months had been a horrid affair for Chinese companies across several industries in the US due to the bipartisan agreement to punish Chinese companies for failing to present vital documents, which shows evidence of the company's yearly audit to see if the company complies with US regulations. But this places the companies in a compromising position because of a Chinese law for companies that originates from the country, which prohibits them from obeying the law of the US. This is seen as a major future problem that could damage the prospects of NIO and its counterparts next year. Getting delisted will limit them to their local market and take a toll on their growth projection. If there is ever going to be a chance that NIO can supplant Tesla in the Chinese market, it's come from an in-depth analysis of what could turn the market over on its head and favor NIO's products and ultimately attract investors to its stock. Sales of new energy vehicles, which include electric cars, more than doubled last month to 169,000 units, according to China Passenger Car Association. NIO stock has been upped by more than 322% from its value last year, which is expensive by traditional valuation metrics. Although there are some good things to say about the company in anticipation for 2021, when it's expected to be more profitable. This chart shows a series of supports and resistance lines and channels which could guide the trend of NIO stock into 2021. It shows a lot of support levels downwards, with support 1 at $28.41, support 2 at $21.10, support 3 at $15.61, and up until support 6 at $6. Until supports break down, the only overhead resistance areas are previous highs, channel topside line, and fib extensions. Resistance 1 is at $54.74, and resistance 2 is pegged at a new high of $89.82. The price of the stock is expected to rise from any dip or correction to the height of this resistance, where it is also expected to continue for a while, dip, and then rise to the previous high on the resistance and then hit a new all-time high. This chart predicts the direction of NIO stock price trending in a parabolic pattern and riding above the support line, tending towards the price of $56. Since early November, the price has formed a potential head and shoulders reversal pattern. Volume signature also supports the pattern. If price breaks below the diagonal trend line with higher volume and also breaks below the horizontal support line, then the pattern will be confirmed. Measured move from the head and shoulders would be on the next horizontal trend line support and also between the 0.5 and 0.382 fib retracement area. To invalidate the pattern, the price needs to move above the prior high of 55.7. We would expect a little bounce off daily 50 EMA or 50 SMA. Things might get interesting from here. Both charts predict a continuously bullish trend of the NIO stock price moving higher but slowly, and only stopping for a while as the market gains more demand and the sales of NIO products increases exceedingly towards the end of the year. And it broke its record monthly sales despite the initial difficulties it faced in the market as a result of the economic shutdown and the activities of its direct competitors. With the world settling down into the new normal post-lockdown and a leap into 2021, NIO is predicted to excel in the new market that will be established once the year takes off. Things will kick off pretty well early next year as they unveil new products with better functional parts that will arouse the demand for more of the qualities present in NIO's vehicles. It has to stay ahead of the pack if it hopes to sustain any growth it earned as the year proceeds. Analysts have been critical of NIO in the short term, but all seem to agree that NIO is a great bet in the long term. NIO stocks will only rise in value and become more profitable. It's no longer far from reality. We hope you enjoyed this video. Please don't forget to give it a thumbs up, subscribe, and click on the notification bell so you can get updates whenever we post a new video. What other stock options do you think will make it big in 2021? Let us know your answers in the comments section below. Be sure to check out our other great videos, and see you next time.